Welcome traders to Stock Market Movers, where we go through the headlines and get to the expert opinions that you guys need to hear about. Like always, we're here to keep you guys in the informational edge. It's an interesting market day today. Of course, the jobs report turning around this market. We'll talk a lot about that. We're going to get into China retaliation, jobs report, Apple warning, solar up. We'll talk a little bit about Amazon with iRobot. We'll touch a little bit on Tesla's stock split. It's going to be interesting. I thought it would be going up on this, but of course getting dragged with the market. We'll take a look at some earnings stocks: Block, Twilio, AMC, Warner Brother, Lyft, Fubo, DraftKings, and then we'll get into a little bit on Globalx Etfs, and then we'll also talk a little bit about some venture capital. Excited to dive into today's show. If one stock caught your eyes today, let's make sure that we cover it. Throw it up in the comments here to the left. Let's get it started. Welcome to Stock Market Movers with none other than Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, let's start diving into this market. I know a lot's been going on, so let's stick with what is the macro and what's going on there. We'll first touch a little bit on the China news. Of course, some retaliation coming into play Friday, saying that they halted cooperation with the United States, including military relations and climate change. We also saw them take the personal route, going against Pelosi there, announcing sanctions on the speaker and her immediate family. Of course, this comes after the second day of military drills surrounding the island on Friday morning. You saw sending dozens of military vessels and hundreds of aircraft across the median line of the strait that has been the official or unofficial buffer zone of the Chinese and the Taiwan for decades. Is something to keep on watch. We also got an Apple warning that I thought was really interesting. Apple warned that suppliers of suppliers in China now strictly enforcing the rule that they need to labeling Taiwanese shipments after Nancy Pelosi's visit to Taiwan. I think this is really interesting. These are the kind of comments that I think would really kind of shake up the semiconductor market, something that we all need to keep on watch, what goes on in that China situation and what comes out of it really. How far will China push back? I think this is just the start, but of course things can get kind of spicy really quickly. Hopefully it's not what happens, but something that I think we're all as investors going to keep our eyes out for. Of course, also we saw solar up on the climate bill. You guys can see some solar stocks were really rocking. Let me see how the solar stocks are performing now. Looks like at least I have the industry up 1.45, still having some good moves in some of these like Run, Sun Power. Let me go ahead and share my screen here so you guys can see that Run move. Not a bad move there in Run. Sun Power today getting that nice little lift. You can, of course, EMPH and First Solar have been some of the ones that really been pushing here. SEDG also pushing, but look how that kind of turned around after their earnings. We'll see how EMPH kind of keeps moving. This has been the leader in solar. Of course, this is coming after the Democrats are going to be trying to pass here the tax, climate, and health bill on Saturday. Schumer said that the Democrats are trying to pass the bill under a budget process known as reconciliation, which would allow the Democrats to pass the legislation without the threat of Republican filibuster. We'll see what happens with solar if they can continue getting the lift there. Of course, this wasn't the only thing that we were watching today. We were watching some economic data to hit, right? And everyone was watching on the USA non-farm payroll, what was going to happen there. And of course, you guys got the surprise today, and it definitely shook up the market. A lot of this shaking up the market because of Fed outlook, but let's take a look at what we got in the numbers. Okay, if you guys could see here, I'm going to actually go towards a shorter time frame so we can kind of find exactly when we dropped off there. You guys can see it in the pre-market action. We fell hard after this report came out. Non-farm payrolls coming in here for July at 528,000 versus a 250,000 estimate. Prior was 372,000. And of course, this leaving room now for talk on the Fed of what's next, right? What is the Fed going to do now that the job and labor market has remained really strong? It's something that I think we're all kind of looking towards, because we all have said, you know, GDP being negative 2 consecutive quarters, you can kind of call that recession. But at the same time, if the labor market's going to be as strong as it is, that's when we would go ahead and take a look at it, and technically not a recession there, at least. Of course, we've talked about what really determines recession, but it's something to keep watch. And we're going to look to see what happens now. Do we get Fed talk that potentially 75 basis points is on the table versus 50? Something to keep our eyes open to. All right, getting out of the non-farm payrolls, let's get out of the macro. Let's get into some of kind of more of a micro topics there. I did see Amazon stepping up to the plate and signing an agreement to acquire iRobot. This is an interesting acquisition here for Amazon, as they don't step up too often here. Let's take a look at iRobot here. It is just trading kind of sideways, of course, on this news. Let's see how Amazon traded on this. As you guys can see, we were heading down there, coming on back, kind of a little bit of a choppy day there for Amazon. We'll see what happens now. But what was this? This was an acquirement of iRobot for $61 per share, an all-cash transaction valued at approximately $1.7 billion. So something definitely to keep on watch is, will there be more kind of purchases of these consumer electrics for Amazon? They definitely took the step on up. Now it's going to be fun to watch what they can do with iRobot and how could they get these sales up. Of course, I'm pretty sure that they were probably watching the sales and how the trends have gone. Of course, a lot of Roombas are probably being bought off of Amazon, so I'm sure they had the insight there, stepping up to the plate to get iRobot. Let's get out of Amazon and iRobot. Let's go towards Tesla shareholders approving the 3-for-1 split. And of course, this is coming as a lot of people expected the shareholder vote to kind of go through. But I'll tell you one thing. I don't think shareholders were thinking that it would be down towards 877. Of course, yesterday I actually shorted this, was actually covering into the 920s, but man, it doesn't look too bad now. We're back there towards 877. Of course, Tesla shareholders approved that 3-for-1 split. And if you remember in 2020, that was a 5-for-1 split. So definitely splitting this stock on up, trying to make it more affordable for investors is what they stated. Of course, this brings the company's shares to 4 billion, something to kind of keep on watch of that. Elon Musk did say that they would ultimately have 10 to 12 gigafactories in an end of the year 2 million annual production run rate. I think this is important to keep on watch. As you've seen the run rate continue to expand. I actually have an image to kind of show us that from exactly kind of where you could see here the expansion and how it's continued to grow. And there's a couple of things that were interesting there. You guys can see here how it's continuing to expect that record-breaking second half. We'll see if they can reach that 2 million annual production run rate in the third and fourth quarter. Something to keep our eyes open to. Now, Musk did say that they started tracking to start production of the Tesla Cybertruck in mid-2023. So keep your eyes to hear on topics of the Cybertruck, and also expecting high volume production on the new 46080 battery by the end of 2022. One of the more interesting comments for me was about autonomous driving here. He said that this is really before autonomy really kicks in. He was talking about the good cash flow. And we have autonomy to some degree, but solving autonomy would be really an amplification of free cash flow. You run the numbers and you're like, wow, could it really be that crazy? But yes, it could be that crazy. And then he stated about the FST, so this is the year, I swear. Something that I think is very important to keep on watch is comments about autonomous and how this could affect the cash flow of these automakers, right? I mean, at the end of the day, definitely going to help hit the bottom line. And it's something that I'm watching. As you guys know that I like to focus on the theme. And I've talked about how if they could just get autonomous right, if they can get that right, I think that really pushes the consumer over the edge on gas vehicles. I know that would push me over the limit. It's not only that I want to get into an EV, but also if I have autonomous with it, that's definitely going to push me and incentivize me further going into EV. All right, that's enough Tesla talk. Let's talk a little bit about another kind of catalyst that hit the tape today. Bed Bath & Beyond kind of discontinuing the Wild Sage. Wild Sage is, of course, a private brand for them, but they're actually kind of spiking. They were spiking this morning. Let's take a look where it's at now. It got up there towards the $8. Of course, to me, this seems more like a short squeeze opportunity that was pushing on Bed Bath & Beyond, but you guys can see how it's kind of filled into that gap, went all the way up there to 8. And especially hearing comments like this just shows me more and more, I don't think Bed Bath & Beyond is turning around their business anytime soon, and something that I'm going to keep on watch to see what happens here. But like I mentioned, discontinuing a private brand that they just launched a year ago. All right, let's get out of the Bed Bath & Beyond. In a second, we're going to get into our first interview in about 2 minutes here. But did want to go ahead and talk about none other than the Donkey Kong DraftKings. Let's take a look really quickly. DKNG, you guys know I was swing trading this week, already fully out, full disclosure. Got out yesterday. Actually, it was yesterday right into the close, so it was pretty close towards that close. So if you're watching stock market movers, you probably didn't hear me get out. But at the close, I talked about how I got out there at the 1690s. Didn't want to hang on towards that kind of earnings. And you can see it pushing up there towards the 1828, even 19 today. It almost got there towards 1950. Earnings coming in here at a beat of a loss of 29 cents. Estimate was at 83 cents. Sales at 466 million, beating the 435 million estimate, and also raising the full year sales guidance. That definitely didn't hurt the stock. It got up there towards 1950. Of course, I was watching this as kind of an NFL trade going into it. Hey, it wasn't too bad. I don't know if you guys caught the preseason last night Hall of Fame game, but it was fun to just kind of see football back. And I think that a lot of investors and gamblers alike were watching DKNG to see if it was going to get off of this. And now that it's taking this move, now it's going to be interesting because I'm going to be looking for a pullback opportunity, but it needs to get back to at least 15 for me. So we'll see if it even makes it back there, or does DraftKings continue to work. All right, getting out of DraftKings, let's start going into our interviews today. Like always, this is all about trying to get to the expert opinions that you guys want to hear from. So I'm excited to get into Globalx Etfs coming on next. If you guys have never heard of a Globalx ETF, well, you might be missing out. I'm going to give you guys the link for you guys to follow along. Check out all the ETFs they have available. It's not just the ones that we're going to mention here today. If we went through all of them, honestly, I don't think John could go through all of them. It would take some time there, definitely, but I'll give you guys the link so you guys can follow along. We'll go to a little Benzinga Pro trailer here, and we'll start into our interview.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure, protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's go ahead. Let's dive into today's first interview. And I'm going to first give you guys that link because I definitely want you guys following along. But let's bring on John Maier here, CIO of Globalx Etfs. Let me give you guys here where we're going to be watching for. So I want you guys to follow along here. Here's the link there for you guys. Go ahead and open it up. We're going to go through some of these ETF. If there's one that catches your eyes a little bit more, definitely throw it up in the chat, and I'll try to ask John at the end here. Let's start first diving in. Welcome to the show, John.
Thanks for having me, Mitch. Happy to be on.
Yeah, excited to get into this. I've seen, even commercials about your ETFs. So I got to say they're getting to the right customer. I'm definitely going to be watching to see how these kind of develop. But there's so many thematic themes that you guys have here. I think it's really awesome way to approach investing is looking into themes. This is what I'm all about. So let's start diving into some of these. Now, the first thing I'm going to do is just kind of mention these ETFs. You can tell me a little bit more about what they really consist of and what's the mission of the ETF. Maybe if you want to mention some names that are a part of it, we'll definitely get into that. But we're just going to lightly touch this. If you guys want to dive deeper, definitely get into that website and dive in a little bit further into the holdings. First one I want to ask about is the DRIV, the Drive Autonomous Electric Vehicle ETF. I'm sure you probably heard my comments there on Elon. Why is this kind of theme interesting here with an autonomous electric vehicle ETF?
Well, thanks for having me on, Mitch. And, Globalx, we have about $40 billion in assets. Half of those assets approximately are in thematic ETFs. Thematic ETFs look at things that are changing, structurally changing what we currently know. Sectors, what's nipping at the heels of particular sectors and what's changing those sectors. And thematic investing goes beyond geography. It looks to play on the changing demographics. And I think it's a really important part of a retail portfolio. Now, if you look at, you mentioned Drive. Drive is, this is an ETF that seeks to invest in companies that are involved in the development of autonomous vehicles, autonomous technology, the battery technology, hardware and software. We have a similar ETF, not a similar, but another one in this space called LIT, which is lithium and battery technology. That's more focused on commodities as well as the battery makers. But Drive is a little more broad-based. It focuses on software and hardware providers, as well as some lithium battery production. You look at some of the companies that are included in this ETF. It does include Tesla, obviously. They're the largest EV makers. But you also have companies that make component parts like NVIDIA or Apple or Microsoft, as well as larger companies like car makers like Toyota. Now, the EV space, obviously, there's been a lot of momentum in the EV space. I think that a lot of that has originally been driven by, no pun intended, by Tesla. But you are seeing every major automaker go into the EV space, particularly with what's going on with climate change and thinking about the future and fossil fuels being, in certain areas of the world, very expensive and hard to move around. So EVs, I think, are our future. And we do have two ETFs within that space that we make a lot of sense. One is ticker Drive, DRIV, and one is LIT.
I definitely have been following LIT. I talk about it all the time. I think it's my favorite lithium ETF, but let's dive into another one here that's interesting for me because it was, for a while, it was the sexy word to use, right? The metaverse. And you heard so many companies bringing up the metaverse. Here's the VR ETF. And I got to say, you guys took that nice ticker there. VR ETF, metaverse ETF. What does this consist of? And I have a question, of course. Is the meta included on this?
Yes. And the metaverse, obviously, there's a lot of buzz around the metaverse, and Facebook changed their name to Metaverse, to Meta. It's, if you think about the metaverse, it's a kind of the next generation of the internet where users are more immersed in the experience. It's a virtual presence, and it could be, it's looking in the future, at least what Meta hopes it to be, where there's several key features, real-time persistency, economic communities, digital avatars. So you can look like anything you want to look like. Use your imagination, and you can be that image or person. Accessibility on multiple devices. And we're only at the very beginning of the metaverse, but I do believe that over time, there will be an economy within this virtual world. It's kind of the next iteration of the internet. We're still at earlier stages. We have a good ticker. Good tickers certainly entice users, but I encourage people to look inside what's inside of inside any ETF. The ticker is just kind of a catchy way to get you interested. Once you do that, you kind of identify what you're looking for. So we think the metaverse has a lot of potential going forward.
Definitely, I would have to agree. It's something to keep our eyes on. And as investors, we always want to just kind of take a look. What is coming forward? Like I always say, we want to be skating to where the puck is going, not necessarily where the puck is. So it's an interesting way to definitely take a look at there with the VR Metaverse ETF. Let's go to the next one here. Let's have some fun. Let's talk about the SOCL, the social media ETF. And of course, there's been a lot of talk in the news lately with Twitter and Elon, which, of course, Twitter is included there. What do you feel about the Twitter battle with Elon? Do you feel that Twitter will win, Elon will win, or maybe both?
Well, I mean, Elon Musk is contractually obligated to buy Twitter. And there's very few outs from what I've read and what I've seen. So I believe the trial starts in October. Luckily Tesla stock's up, so maybe he has a little more money to actually buy it at this point. But I think he'll have to pay a hefty price if he wants to get out of that transaction, because from my understanding, the contract is rather strong. But if you look at more broadly into the social media space, it's an area that certainly has been hard hit of late. And it's also an area that's been maturing. So naturally, you're going to see some softening, particularly when we're seeing some concerns about the economy overall. But while we're facing some headwinds at the moment, I do think that there's tremendous opportunity within social media. Just think about what Meta is looking to do with the metaverse, or Facebook's looking to do with the metaverse. There's a tremendous amount of ad opportunity, e-business, and there's a lot of recurring revenue streams that are available within the social media space. And thinking about user subscriptions, which Twitter is starting to do, charging $2.99. There's pay-to-pay payments. There's e-commerce commissions. There's music opportunities. So if you're stepping into the future, I think the future really for social media is probably the metaverse as well. And digital ads, I think they'll pick up towards the towards the end of this year.
Yeah, it's fun to kind of watch how those two will kind of be related, right? The VR and the social aspect, how they really come together, I think is something that I know that the VR companies and anyone that's in part of the metaverse is always going to be trying to bring the community aspect together with that social aspect. So it's interesting to watch. Now, one thing that I know for sure has been on a lot of people's radar, because we've been seeing all the cyber attacks that have happened, especially after the Russia-Ukraine crisis, and we're going to continue to watch cybersecurity. I mean, it seems like even the strongest infrastructures get hacked nowadays. So what do you feel about Bug and the cybersecurity ETF?
Well, I think cybersecurity has certainly been in the news. It's one of the themes that in this market where growth and momentum certainly has gotten hard hit, it has held up relatively well. Now, if you think about why, it's because almost every company has to purchase cybersecurity protection for their systems. They may be required to do it at some point by the government. And the amount of spending within that space is just increasing. And, companies are looking for end-to-end protection, whether it be identity or systems. And you're actually seeing some consolidation within the cybersecurity space, which is actually helping improve some of the pricing for some of these companies. You saw SailPoint being purchased by a private equity firm. Now, I think that because of the expected increase, the actual and future expected increase in revenues for these companies, the market certainly has taken notice. It's a great business model as well, just a recurring revenue stream. You constantly have to pay into it, and it's needed, whether it be shareholders in essence, shareholder protection because you need to protect your company. So it's a fiduciary responsibility by management to purchase these services. So you're only going to see spending increase with the cybersecurity space, and you mentioned the Ukraine-Russian war, and that certainly brought to light about hacking by governments, which was already occurring. So, great space to be in.
Definitely something that you want to be in, and I want to get some exposure myself, so it's something that I'm watching for. Now, another area that I've seen huge declines in some of the leading cloud computing companies, right? And I feel like the market is probably the only place where you see people run away from discounts. It seems like we're getting some nice discount and valuations coming into some of these cloud computing plays. Of course, you guys got the cloud computing ETF, Cloud CLOU. So check that one out, team. What do you feel about cloud computing moving forward?
Well, if you think about it, and there's also some kind of analogies to cybersecurity, enterprise spending on cloud services to remain really strong so far in 2022, and I don't expect that to decline in the near future. It's just part of business models, particularly after the pandemic. You saw record growth in certain cloud franchises, and you look at some of the legacy players like IBM, and they're able to translate existing relationships into meaningful cloud growth. So, while the stock prices certainly have taken a hit, as a lot of momentum stocks have, I don't see spending decreasing in this area at all. And we're likely to see some M&A activity in the space, which will certainly shed some light and some focus on cloud computing companies. And spend, as mentioned, there's about $500 billion is estimated to be spent on cloud technologies in 2022. That's up about 11% just relative to last year. So we as a firm, and I talked closely with our head of research at Globalx, Pedro Palandrani, and he believes that we're still in the early stages of cloud opportunities, that they're continuing to play out. And coming out of COVID, as mentioned, business models have shifted. People are working from home, and they rely on the cloud. And that's not changing anytime soon, or ever. So we're very positive on the cloud space.
Definitely, I agree with that. I work from home myself. I depend on the cloud all the time, so I know how that goes. Now, the last thing I'll leave you off with, John, is just a quick mention. Do you seeing any changing in kind of the investors' trends? Are they starting to feel like, yes, they're coming around, the sentiment's starting to change?
Well, certainly we had a really strong July. There was a good rebound. What I found rather interesting today, and you mentioned it earlier, is the job reports. The job report came in way stronger than anyone expected. And that caused concern because what does that mean? It means the Fed likely, since they're data dependent, will increase 75 basis points in the September meeting. But there's a lot of time between now and September, and there's a lot of data points that will be coming out. And there's also some indications that the jobs report, some of those job numbers are people who have second and third jobs. So perhaps the numbers weren't as strong as the actual numbers appear. That being said, I think there's a bit more positive sentiment in the market. We certainly had a rough first half of the year, and I think some of the bad news, or a good amount of the bad news, is out there. I think what's going to be key is, where are we with inflation, and has the Fed done any meaningful job in terms of crushing demand? There are signs that inventories are picking up. Credit card debt is increasing. So if some of that bad news is out there, the markets look a lot farther into the future. And so I think there is a bit more positive sentiment, assuming the inflation numbers start to roll over.
Definitely. What a surprise in that labor market today. Thank you for joining me today, John Maier, CIO of Globalx Etfs. And like I put that link up in the chat, definitely check these out. There's plenty more to go through. Appreciate you coming on, John.
Thanks a lot. Bye, Mitch.
All right, guys, that's going to do it for our first interview today. We went in through some of these ETFs. I would definitely suggest checking these out like we've always talked about, right? Sometimes you want to take the basket approach versus taking just the one ticker approach. This is definitely one way to go ahead and do so. All right, let's go ahead. We're going to get into our headlines here, but I do want to go ahead and announce something here. We did get a giveaway on the all access stream that was on just prior. So we do have a winner of course, it's $150. I'm pretty sure this is a gift card. I want you guys to go ahead and check out my man Alexander here with the winner. If you are the winner here, you can definitely reach out to shows@benzinga.com and we'll go ahead and get you that. We do have your email. We'll be reaching on out, Alexander. So if you're here, congratulations on the winning that giveaway there on All Access. So if you guys are listening in and are like, well, what is this giveaway we're talking about? Well, check out our All Access show. All you got to do is sign on up so that you guys can be registered in the giveaway. And we'll be doing this next week. So check it on out. Thank you, like always, Alexander. I don't know if you're in the chat there still, but congrats to you, man. All right, let's get out of that. Let's take a look at what tickers are moving on out there and if we're seeing a little bit of action in the overall market. I want to take a little peek here at the SPY before we get into some of these earnings. Are we still just kind of leaking here? And it looks like we're holding up a little bit by the 413s. We were looking really weak towards the open, bounced a little bit there. We're wondering what's going to happen towards the close. I'll keep watch here. Right now, it's not looking too bad. All right, let's get into some of these earning stocks to go through. The first one we want to get into, of course, is Block. Let's take a look at Square to see how it's trading. All right, so you guys can see it actually came down off of those earnings, coming in here at a beat, and a beat here, 18 cents beating the 17-cent estimate. We got here sales at 4.4 billion, beating the 4.35 billion estimate. Block did update investors on its operating expense guidance, where it kind of adjusted the expenditure that it wants to go into. The CFO stated in the conference call that we're reducing our planned investments for the full year of 2022 by 250 million as we enter a period of potentially uncertainty. So you guys are seeing Square push on up there, tried to hold the 92. Now it's just going sideways. We'll see if its close is up towards that 92. Was really going to keep a close eye on PayPal to see how this traded with it. PayPal actually coming down at before the open, coming back on up, similar kind of chart hanging out near that VWAP. All right, let's get out of Block. Let me know if you guys like any of these tickers. I'll definitely take a little bit more time if any of these are catching your eyes. Let's keep going here. Looks like Constitution's talking about the dollar too strong for now. I kind of agree with that. The dollar is bouncing back today. That's why you probably saw silver and gold down today. Let's actually take a look at some sectors out there today. I know I wasn't able to get into what was hot and what was not, but let's go into it now. As we just kind of go through, energy taking a nice leap up today. You guys can keep eye on some of those names. Oil definitely taking a nice leap on up. ExxonMobil getting a nice little push right from the open. Chevron getting that nice little push. ConocoPhillips with a big push, 3.57%. And Oxy. You guys know I was actually looking at this yesterday and I was like, where is Warren? When's the buy button starting back? And wouldn't you know it? It looks like it happened today. We'll get confirmations a little bit later, but 57 was an area that we've seen plenty of times get bought up in the past, and you can see it bouncing today, getting on up there towards the 59.50. We'll see if Occidental Petroleum can hang on here. All right, let's continue going. That was energy. Basic materials didn't have a bad day. Aluminum, copper, and industrials. Utilities still coming on down. All right, let's get back towards those earning stocks. Twilio was one that we were taking a look at, and this one just continued leaking actually towards the open and then just continuing the leak there. Coming in at a loss of 11 cents, beating the 21 loss sentiment. Sales there at estimate. Sales at 943.35 million, beating the 919.66 million estimate. Lowering the Q3 guidance. Sales are forecast between 965 to 975 million compared to estimates of 979.32 million. So even on the high end, they're not going to hit that number of that expectations. And you guys see in Twilio, definitely get hit hard on it. Definitely interesting to see Twilio kind of turn around here. It's almost back towards kind of those pandemic numbers where it was at 75. I still remember when this stock was 30, so it did get up higher than 400. Interesting to see it continuing to leak down here. Let's go into, of course, the 8th favorite, the AMC, now up past $20. Talked about this level for a long time here, guys, that I was watching to see if we can get back into this gap zone, into this part where I think we could really get some drive. And AMC coming back, baby. It came back strong today. In the after hours, it got hit hard off of this earnings report. Was down as close down towards 17 and 16, and it came back with a vengeance today, getting on up there past $21. That's a squeeze if I ever call a squeeze there. AMC getting some lift here. Adjusted EPS came in at a loss of 20 cents. And then missing here a 19-cent estimate. Sales at 1.17 billion here, beating the 1.16 billion estimate. AMC does plan to issue the dividend to shareholders in the form of preferred shares listed on the New York Stock Exchange as none other than ticker APE. As you guys see it getting on up there, it tried to keep pushing. AMC CEO saying that the board has authorized establishing a $100 million fund for investments. So look out for maybe acquisition talk, but definitely nice day there for AMC. Let's continue going here. Let's take a look at the next one up. We're going to talk about Warner Brothers, and this was a disaster. Let's go to it. Let's see if it bounced back a little bit at least. And no, it didn't. It didn't bounce back at all there from the open. Warner Brothers Discovery here, of course, reporting here at a loss of $1.50, down 92 cents year over year. Sales at 9.83, missing the 11.85 billion estimate. So almost a miss of $2 billion there on the sales. Definitely not what you wanted to see there. They disclosed a total direct-to-consumer subscriber base of 92.1 million. So that wasn't the worst, but definitely continuing the leak there, Warner Brothers. All right, let's continue going through some of these earnings. In about 6 minutes, we'll get into our next interview here. Let's talk a little bit about Lyft. Lyft, of course, getting some push after Uber's report was really getting that lift. Now look at Lyft. It's really pushed off. If you see down here from around the 13s to where we are now, we're talking about a 50% gain here in just what? Since Monday? Yeah, just since Monday. That's up in about 4 days, 50%. What a move there in Lyft. Q2 sees sales at 990.7 million, beating the 987.94 million estimate, lowering the revenue guidance. And normally when we've seen a lowered guidance, we've seen the stocks actually come down on it. But as you guys can see, Lyft didn't turn around today. And for that being said, take a look at Uber. Continuing the strength also coming from the bottom there. And in just about a week, also 38% move there for Uber. So Uber and Lyft, not looking bad right now. All right, let's go towards Fubo TV. You guys know how I like Fubo. I called it out when it first came out, when it was down at levels at like $10 or $11. Now it's down towards $3. You can see it's tried to come back today. Let's take a look at their EPS here, coming in at a loss of 45 cents, beating the loss of 69-cent estimate. Sales at 202.5 million, missing the 227.8 million estimate. Fubo reports Q2 2022 subscriber base of 347,000. And so one thing that I'd mentioned with Fubo is, we're just going to kind of keep on watch these streaming services. Of course, Disney and Netflix have been struggling. And so until I can see those stories really turn around, I think I'm not going to be interested in a stock like Fubo. But that doesn't mean that I won't keep an eye on it. I just will not react until I really see kind of the whole environment change on over in streaming. It just hasn't pointed towards the upside, at least in the market environment that we're in now. All right, let's go ahead. Let's continue going. Let's get into the next one I wanted to talk to you about is Expedia, because it's interesting to hear about traveling not looking too bad in a high inflationary time. I thought that you would probably see these numbers a little bit getting hit hard, as you're probably seeing travel take a step back, but at least from Expedia, not what we saw here. EXPE here, Expedia, you guys are seeing it. Let's take a look at the intraday. It actually dropped and gave away those gains there that it got after hours. Let's talk about the EPS coming in at $1.96, beating the $1.58 estimate. Sales at $3.2 billion, beating the $3.0 billion estimate here. Lodging bookings reached a record high, and we posted our highest ever second quarter revenue and adjusted EBITDA. So it doesn't look too bad there for Expedia, and it's hanging on. Even though this is pulling back, it's going to be interesting to see, does it cut through that 100 or does it get back through the 110? I'll keep a watch to see if Expedia can get that lift. Didn't expect to hear the travel doing so well, but hey, you guys see it there. Sometimes the prices and what we're actually seeing are two different things. All right, that's going to do it for our earnings talk there. We can take a look at some stocks that caught your guys' attention in the chat. I see you guys talking about Apple in the chat, Dollar, Oxy, Tilray. How did the cannabis stocks do today? They're up there towards 4, holding on. I remember I had Tilray around 350 to see if what would happen with that bill. It's up there hanging out there. We'll see if these can actually get moving, really. It'd be interesting to see Tilray, let's say, get up there towards, it's kind of funny. It's 416, but, you know, we can just say 420. We'll see if Tilray can get on up there. All right, let's get out of kind of these stocks here. I know that you guys wanted to take a quick look at Apple. I've talked about Apple. For me, as long as it can stay above 159, it's going to be in the bullish sense, even though we did get that warning from them, from China, about labeling certain shipments. It's something to keep on watch. It's hanging out up here. And if you take a look at the SPY is also hanging out just up here at the 413. Of course, we spiked up there towards 414s, turned around there last time. Let's see what happens this time as the SPY is trying to get back up there. CC, I know that you wanted to talk about AMC. No worries. You want me to take a quick look at Saga? I got you. I'll take a quick look here. Saga up there towards 23s. It got up there past it, then came right back. Doesn't look too bad here. You can see it on the 15-minute. Let's go towards the hourly. You guys know how I like my hourly charts. Trend line came back through this level, so 20 is the level that I would look for it to really hold now on some pullbacks. It got up there towards 24. VWAP around right now around 2181. I'd kind of watch this to kind of get back towards 22. You can see how it clicked the VWAP right here, 2163, low at 2163. So it seems like someone wanted to buy that pullback. We'll see if it gets through that 23 level. Of course, this one involved with kind of the monkeypox situation, and it's been already a massive ride here. So we'll see if it can continue pushing. A nice close above 2238s would be a good level here, or 2244s, which is the high here. We'll see if that monkeypox stock can continue pushing. I also been seeing GovXV, GeoLabs. This one's been also moving with that move. So it's interesting to watch these stocks, just not my cup of tea. All right, that's going to do it for our talk about some headlines. We're going to get into our second interview in just a second. Like always, guys, please smash the thumbs on up if you guys appreciate me getting through all the headlines and getting to the expert opinions. That's what it's all about here, trying to keep us in the informational edge. In a second, we'll be getting into it here with Jeff Ransdell, a managing director and founding partner at Fuel Venture Capital Partners. Excited to dive on into this, especially because it's, South Florida driven. I mean, gotta love the Miami life in the South Florida. Let's go ahead. Let's dive on into it. I'm going to play a quick trailer and we'll get into our interview.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's bring on Jeff here. Excited to dive on in. Welcome to the show, Jeff, or welcome back.
Yeah, how are you, my friend? It's been a little while.
Yeah, it's been a little bit, and I'm sure that you've probably heard all about the worrying. Your phone keeps blowing up. I'm sure text messages all around. What's going on in this market, Jeff? Talk some sense into me. What do you see out there?
Well, I don't know if we can talk sense into you, because really nothing.
Yeah,
it's a very strange world we live in right now. I mean,
That
good
is the
news
truth.
is viewed as bad in the market, and bad news is viewed as good and drives the market. So it's a super interesting time, right? Everybody's worried about recession, but we had great numbers on unemployment today, and for half of the day, 75% of the day, it was trading down. As the big market is up today. I think everything else is kind of trading down right now. You have a better look at it than I do, but yeah, it's strange times.
It is strange times. I've talked about this on our morning show, Pre-Market Prep, that this market just seems to trade with illogic versus logic. If you're trying to put logic to the market, a lot of times you end up scratching your head. That's what I've talked about, and I think you're seeing the same there. Of course, inflation is on everybody's mind. Do you feel that inflation's truly peaked, or do you think it's going to roar its ugly head in the wintertime?
It's like everything, right? It depends on what camp you live in. If you live in the camp of positivity, then obviously we all think that the things that are happening right now, we're going to start seeing the inflation numbers coming down. I mean, we're sure throwing a hell of a lot out at it to bring it down, right? And then if you live in the negative camp and you think that the world's coming to an end, then yeah, of course it's going to continue to get bad. But I mean, I think at the end of the day, this is how we look at it here at Fuel. The last 6 months have been very ugly, based on a lot of fear that came in. And what's starting to happen now is you're starting to see earnings coming in, and all of the things that we kind of hunkered down and we're cringing our teeth on. Oh, it's going to be horrible. It's turned out to be not as bad as we thought, and you're starting to see the market kind of rally out. We believe that the trough was June 16th. And if again, you have a better look at where the market is at this second. But as of this morning, we've already recovered almost 12.5% of the market since that date. And I think that's really interesting, right?
I agree. I feel like this market's getting to the point where it doesn't even want to fight down. It more along wants to fight back to the upside. And it's fun to see that the market is kind of hanging on. Even when we get these drops in the pre-market, we're making up a lot of those losses in the actual intraday market. Seems like the buy the dip mentality is definitely coming back, or it could just be investors starting to really dip their toes and not wanting to be left behind. Is something that I'm going to keep watch. Of course, the surprise job report coming in today shook up a lot of things. How do you feel that the Fed will react seeing this kind of high increase in the jobs added?
Again, I think we've kind of expected this. Again, and this is one of the things that is a key thing that we look at from this whole argument about recessions, right? I mean, to me, it's pretty hard to say we're in a recession when you have so many people who have jobs, and quite frankly, anybody who wants to have a job can go get a job, and those jobs are paying more than they were a year ago. So for us, that's a really hard one for us to get our arms around and start saying that we're in a recession already, or we're going into a recession. As far as how the Fed is going to react to what happened today, it's again what I said 3 minutes ago, right? It seems that good news is treated in a bad way, but I really don't. We do not believe that the Fed is going to do the things that it has kind of already stated it's going to do. We think things are going to be less severe, and I think if you believe like we believe that the market's very anticipatory, Right now, again, if you look at the market right now, it would say that we don't think that this is really going to be that big of a play.
All right, let's get out of kind of the macro talk. Let's have some more fun. I want to talk to you more about venture capital and kind of your signature here, founder focused, investor driven mindset. What does this really mean, and why has this been your signature?
Yeah, that's a great question, and thank you for asking. It's actually the first person that's ever asked me that. So my whole team comes from the public markets, and we came into the private market because we thought it was such an incredible opportunity. But when we came from the public markets, our learnings going 70 years of experience across our whole firm, the investor comes first. At the end of the day, as a venture capital firm, if we don't have our investors' capital, there's no way that we can invest in these companies. There's no way that we can help these founders reach their dreams and create returns for the investor. So it all boils down to the investor. And then from the founder focus piece, we're in Miami, Florida. We're not out in Silicon Valley. And for us, it's about relationships, and it's about treating these founders and really being more focused on curation and development more than, hey, let's see if we can crank the screws in a little bit tighter and get a little bit more money or make people's lives a little bit more difficult. So our whole mantra as an organization is really more about servant leadership. So we serve our investors and we serve our founders.
Excellent. Now I want to go ahead, and I know that you guys work a lot out of South Florida. The venture firm has deployed over 100 million in South Florida. As someone that grew up in South Florida, I want to say thank you right off the back for that. And tell us about the experience that you're seeing and innovation that's coming out of South Florida.
Yeah, so if you're from down here, I mean, we started Fuel Venture Capital in Miami in 2017. Quite frankly, everybody thought I lost my mind, right? In 2017, you would know this. There wasn't a tech shop anywhere to be found for 5,000 miles, right? And you can say that we got lucky, or you can say that we were pretty strategic. But at the end of the day, you look at what's going on in Miami right now. Every major venture capital firm is here. You've got hedge funds from all over the country that are moving here. Miami is really turning into a financial hub. And the tech scene is a big part of that. We're very fortunate to be seeing that. But yeah, we have founders that are coming in from all over the world, and that's a really important insight, I think, for investors. The whole notion that you got to be in Silicon Valley. Information's been democratized. The world is flat. You don't have to live in Silicon Valley in order to be successful, especially if you have firms like Fuel Venture Capital that's sitting in Miami. You can be here in a beautiful location, in a very diverse community, and build incredible companies. And there's a tremendous amount of resources here now. So it's super exciting to be here in Miami at this time.
Definitely, and I agree that it's definitely changed the landscape in South Florida. I think you definitely played a part in that, so I'd have to say thanks, Jeff. And something that we're going to keep watching is the expansion of Miami as a tech hub. Definitely something to watch. Now, I did see that you recently met up with none other than new WWE superstar Logan Paul. So I wanted to hear a little bit about how that meeting went with Logan, and if there's any projects you're working on with Logan that you're willing to share with us, or maybe just some fun insight on what you think about Logan's superstar getting into WWE.
Yeah, so it's not actually Logan; it's his brother Jake that we work closely
there you
with.
go, Jake Paul. There you go,
Jake. Yep, Jake Paul, and Jake is an outstanding guy. He has impressed me on many different fronts. Just a great human being, super smart. Just a grinder. He sees opportunities, he creates strategies to get there, and he gets it done. And I am a big fan of his. He is a founder of a sports betting company, which will be making some really big announcements here in the next couple of weeks. I obviously can't steal their thunder. But it'll be in the micro betting space and also just in sports media. Think Barstool Sports, but
Nice.
out of Miami, Florida, and with a really cool, innovative twist that only Jake and his partner Joey Levy can create. So we're super excited. We are on the cap table. We sit on the board. We're very close with them. And personally, I'm just going to call it right now. I think it's going to be the largest sports betting app on the face of the planet in the next 24 months.
Love to hear that, Jeff, and it's something that I'm interested in hearing a little bit more about. Of course, I'll wait for the thunder to drop, but I'm going to have to reach out to hear a little bit more about that, because I love this space and it's something that I always focus on. As you probably, I don't know if you caught earlier, I did have a DraftKings trade this week because I was thinking about the NFL. And I think, you're going to continue to see it continue to rise. I always talk about, has states come legal, so will the revenue come on in. So the space is interesting. Appreciate you talking a little bit about that. Yeah, the expansion, I think, is just going to just started, right? And there's definitely opportunities in that space. It's something that we'll all be watching. Thank you for coming on, Jeff. Like always, I'm going to definitely have you back on, especially when I hear about that thunder coming on out. So I appreciate you coming on, like always, talking about the overall market and, of course, the venture capital. And I wish you the best success in South Florida. Continue on doing
No problem, buddy. We look forward to it, and we'll let you know. We got a couple exits coming out here in the next couple of months. It's going to make the Miami scene even bigger, and they're all going public. So there'll be great conversations for you.
Love it, Jeff. I'm going to have to catch up with you next time I'm down there.
All right, my
friend.
Have
a good one, man. Take care. All right, let's go ahead. We're going to wrap on up here. Get you guys on over to continue going with Benzinga. Like always, it's fun to talk to the experts in certain areas and find out what do they see, right? And it's fun to definitely get towards a person like Jeff that sees a lot and hears a lot. That's why I wanted to ask him how he felt about the overall market. You can see some optimism there, and I think that's how a lot of this market is approaching right now, the recent price action. There's optimism in the markets. I definitely feel it. And I feel like, now the battle's on. What's going to happen with CPI next week? Of course, CPI comes out Wednesday next week. We're going to all be eyes open to see if this continues the rally going, or do we come right back down to those lows? We'll see what happens there. I will keep going and getting some experts to come on. If you guys have any experts that you guys want on, whether you see these guys on other media or you just want to get someone on right here on Stock Market Movers, reach out to the comments after the show. I'll make sure to go ahead and reach on out and land that guest for you guys. We're going to keep pushing here. Like always, it's all about informational edge and trying to get to all the headlines and getting to the expert opinions that you guys need to hear to continue moving forward. Hope you guys enjoyed this week. We had a great one. Let's keep pushing forward. We had an amazing interview yesterday. None other than Molin and my man Zunaid kicked it out the water. We're going to continue pushing forward right here on Stock Market Movers, and I'm trying to make this the best afternoon show that there is out there that covers everything and gets to the experts that you guys want to hear from. Let's take a quick peek at the overall market. Did we see some leaking come back into it? And it looks like, yes, we rejected to get towards that 414. Couldn't continue through it. Now it's leaking right back down through that 412s. I think we could actually end the day somewhere close to towards the 410s or 408s. Do I think that we're going to break through 408? No, I don't think that. I think we're going to stay within the range here. And as long as we stay within the range, it's kind of similar to the pattern that we got here. And I'm wondering, do we ever get that drop off, or are we going to get the spike above this level? So a spike, clear spike above, let's say 420, going towards 421. And yes, you guys will have me in the bull camp there, and I will be sounding the alarm for the upside there. We'll see what happens. Like always, nobody knows really, and we're going to continue battling. I'll be here with you guys. I hope you guys will be joining me right here on Stock Market Movers. Appreciate you guys like always, and let's keep going.